This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Venezuela's loss of a key U.S. license that allowed it to export oil to markets around the world and secure investment is expected to hit the volume and quality of its crude and fuel sales while prompting a flurry of requests for individual U.S. deal authorizations. U.S. officials had warned that absent progress by President Nicolas Maduro's administration on implementing an electoral roadmap agreed last year, the U.S. would not renew License 44, which since October has eased oil sanctions in place for the last 5 years. On Wednesday, the Treasury gave companies 45 days to wind down pending transactions, particularly crude and fuel sales, through a more restrictive license.
Oil prices fell to a 3-week low on Thursday, extending losses on hopes of easing tensions in the key producing region of the Middle East, while investors turned their focus to a bleaker demand picture. Brent futures were down 60 cents, or 0.7%, at $86.69 a barrel, while U.S. crude futures traded 53 cents lower, or 0.6%, at $82.16 a barrel at 11:35 GMT. Both were down for a fourth straight session. Prices were down more than $1 at their intraday low and have slumped around 4% so far this week. Investors are unwinding the geopolitical risk premium in oil prices on the perception that any Israeli retaliation to Iran's attack on April 13 will be moderated by international pressure.
Moving on to the top news in the energy sector.
A drop in the European Union's carbon price this year could mean that a fund intended to be among the world's biggest schemes for new green technologies will be smaller than budgeted for and potentially jeopardize some low-carbon projects in the EU. After soaring above €100 per tonne of CO2 last year, the cost of EU carbon permits had nearly halved by February, as emissions covered by the market plunged as a result of lower power demand and higher renewable power generation. The fall has wiped out €4.1 billion, $4.36 billion, in potential revenues for Europe's budget for low-carbon investments so far this year, analysis of market data shared with Reuters by consultancy Vate showed.
The Biden administration is expected to grant a request by South Korea's Hanwha Qcells to reverse a 2-year-old trade exemption that has allowed imports of a dominant solar panel technology from China and other countries to avoid tariffs, two sources familiar with the White House plan said on Wednesday. The news sent shares of solar manufacturers, including U.S.-based First Solar, higher in afternoon trade. The Qcells request, which has not previously been reported, comes as the company is seeking to protect a pledged $2.5 billion expansion of its U.S. solar manufacturing presence against competition from cheaper Asian-made products. Next, we have the top news in metal markets. China's March imports of aluminium surged 89.8% from a year earlier, customs data showed on Thursday, boosted by better demand prospects from the world's biggest consumer of the metal. The country imported 380,000 metric tons of unwrought aluminium and products, including primary metal and unwrought, alloyed aluminium, last month, according to data from the General Administration of Customs. Market participants' expectations for higher demand for the metal as China's industrial activity recovered pushed the imports higher, analysts said, with the country's manufacturing activity expanding for the first time in 6 months in March.
Copper prices climbed to the highest levels in 22 months on Thursday as funds extended their buying spree, while the dollar weakened and inventories tightened. The rally that has fueled gains of 13% in copper so far this year contrasted, however, with lackluster physical demand for copper in the biggest consumer, China, analysts said. 3-month copper on the London Metal Exchange gained 1.3% to $9,705.50 per metric ton in official open outcry trading, having touched $9,739, the highest since June 2022.
We will now look at the top news in the agricultural sector.
India's pulses imports in fiscal 2024 surged 84% year-on-year to their highest level in 6 years after lower production prompted India to allow duty-free imports of red lentils and yellow peas, government and industry officials said on Thursday. Higher imports by India, the world's biggest importer, producer and consumer of protein-rich pulses, have been supporting global prices and helping bring down stocks in exporting countries such as Canada, Australia, and Myanmar. India imported 4.65 million metric tons of pulses in the year ended March 31, 2024, the highest since fiscal 2018, and up from 2.53 million tons imported a year ago, according to provisional data shared by a government official who declined to be named.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.